Hello, welcome to the European Open Briefing for Thursday, June the 8th. I'm Rafi Bajajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So as you would expect, there is quite a bit of risk aversion in the markets this morning, given that it is a triple threat Thursday today. We have the testimony by the former FBI Director James Comey in Congress. That's being watched due to the possible impact on Trump's presidency. We also have the UK general election, and of course the ECB's monetary policy meeting. Although the risk of has eased a little bit since yesterday. We saw the dollar come off its 7-week lows against the yen after James Comey released his opening statement at today's testimony, where it didn't really reveal anything too much apart from what was already known or what was already being speculated in the press. So that did provide some relief to the markets. The pound was also boosted by the last polls before voting starts today that showed the Conservatives have managed to increase their lead a little bit against the Labour Party. While the euro is steady as investors pretty much on the sidelines as they wait for fresh signals from the ECB. But we did have quite a bit of data this morning from Japan and China. And also in commodities, oil prices, they fell sharp yesterday. They slumped 5% after a surprise increase in US inventories, although they have now steadied. But let's begin with the dollar-yen pair. We can see the dollar had been coming under pressure due to the ahead of the Comey's testimony, but we saw the dollar rising a little bit. It did touch a 7-week low of 109.09 yesterday. It did recover to just the 110 level. It's currently trading though at around 109.60. As I mentioned, Comey did release his testimony, and it did confirm that Trump did indeed ask Comey to drop the investigation into Michael Flynn. He's the former National Security Advisor who was forced to resign earlier this year. But despite that, though, under the US federal law, there has to be evidence of corrupt intent that Trump wanted to obstruct the course of justice, and that's going to be pretty difficult to prove at the moment, according to the markets at least. So the markets aren't really seeing the situation as leading to Trump's impeachment, at least not at the moment. So there is some relief in the markets and for the dollar as well. And also, apart from that, the Comey did also confirm that the president himself is not under investigation as part of the FBI's investigation into the Russian contacts with Trump's campaign team during the elections. Let's move on to today's data now before we move on to the pound and the euro. We did have trade data out of China. We saw exports rising more than expected by 8.7% in May, and imports were also beat expectations to rise by 14.8%. That did lead to a smaller trade surplus, but it did boost stock markets, particularly in China. And it also did allay some concerns of a more significant slowdown. Although overall we are seeing many analysts still predicting that the Chinese economy will lose some steam over the coming period, having grown quite strongly in the first quarter. It was a different story in Japan, though, as we were expecting an upward revision to Japan's GDP growth for the first quarter from the initial estimates of 2.2% to 2.4%. They in fact were downgraded to just 1%. That gives a quarter-on-quarter rate of 0.3%. Although this was due to one-off factor due to big adjustment in oil inventories in Japan, and overall the underlying strength in the Japanese economy is it's evident. We do have a Bank of Japan policy meeting next week, and they will likely signal that inflation is still far off the target to justify cutting back on stimulus. The yen did fall briefly after the data, but it's since risen. Apart from the triple threat factors we have this morning, we also have other developments such as North Korea has conducted further missile tests, and we're also seeing further tensions in Qatar. Qatar has put its military on the highest alert after 9 mainly Muslim states cut diplomatic ties with the country over allegations that Qatar is funding terrorism in the Middle East. And this risk aversion is keeping gold near 7 months highs, although it is off those lows today. And as I said, the risk aversion did come off a little bit after the Comey testimony wasn't quite as bad as many were expecting. Let's move on to the UK pound now, because the pound has been steadily rising over the past 24 hours. It's currently trading at around 1.2972 dollars. The last polls ahead of today's vote put the Conservatives at between 7 and 13 points ahead of Labour, and that should be enough to give Theresa May a comfortable majority. If we do see a very slim majority, or even the Conservatives losing absolute majority in Parliament, that would potentially be very negative for sterling. Polls in the UK close at 10 p.m. local time. We should start to see the exit polls published at 23 hours GMT, but we won't know the final results until early on Friday morning. The euro, though, has been rather steady this week, although we did see some fluctuations yesterday. That big drop yesterday did come after some reports that the ECB will possibly downgrade its inflation forecast, although we did see the euro bounce back higher again. It's currently trading around 1.1250. And although even if the Eurozone does downgrade its inflation forecast, they will very likely upgrade their growth forecast, and they will probably go ahead and start withdrawing stimulus early next year. Although for the time being, all we will be likely be getting from Mario Draghi at his press conference is that he will probably remove some of that negative bias, that's the dovish bias from the policy statement and about the growth outlook for the Eurozone economy. And finally, let's have a look at oil prices. We saw a very big slump yesterday. We saw US crude falling below $46 a barrel to a 1-month low. We've seen some stabilization in oil prices. That big drop came after the EIA's weekly inventory numbers showed that US crude stocks unexpectedly rose by 3.3 million barrels in the week ending June the 2nd versus expectations of a 3.5 million drawdown. That was the first increase in US crude stocks in 10 weeks. And apart from the ongoing concerns about supply glut, we also have the Qatar tensions leading to fears that it may lead to the OPEC members breaking up that output deal, given that Qatar is a member of OPEC. So that OPEC deal is looking rather fragile at the moment, so that's weighing on prices as well. Moving on to today's economic calendar, coming up later, we've got GDP revision for the Eurozone economy in the first quarter. In the US, the main data will be weekly jobless claims, and we also have housing starts out of Canada. We did just have industrial output numbers from Germany that they beat expectations in April to rise by 0.8%, but the main focus will be on the ECB's monetary policy meeting. The decision is due at 11:45 GMT, and Draghi's press conference at 12:30 GMT. We also have Comey's testimony before the Senate Intelligence Committee in the US at 14 hours GMT, and of course the UK elections much later in the day. That's it from me. Thank you very much for watching, and have a great day.